Hello, Nataraja. Welcome to the weekly top 50 mutual fund analysis as on October 4th, that is last Friday. Let us get on with the presentation. So, let us look at the summary. Now, comparing the two summaries, the total number of mutual funds from September 27th grew from 911 to 917. The monthly return was 1.32 last week. This week it is reduced to minus 3.09, which is a huge weekly correction. 3.58% monthly gain is wiped out to minus 0.08% monthly gain. 9.35% 3 months gain is reduced to 4.05%. 23.42% of 6 months gain is wiped out to 16.43%, and annual gain of 44.98% is reduced to 41.95%. Now, let us take this 3 months gain as kind of an average. So, if you look at it, probably if you multiply by 4 times, now we are looking at potentially an annual gain is something like 16%. So, that is the scale we have in the Indian equity market now. So we need to be very cautious. Now let us compare some other numbers. Weekly 1 week return of top weekly 50 reduced from 6.1 to 1.46. Okay. Then monthly gain of 8.37% maintained at 8.78, but this is deceptive. I will explain why, because this is because of dominance of China-based funds. Indian equity-based funds did not do well. And annual gain reduced from 72.17, annual gain of top 50, annual top 50 reduced from 72.17% to 67.85%. So we had a bad week, and the next week also could be equally bad. We don't know. Now let us look at the weekly top 50 and at the left and monthly top 50 at the right, so that we can see any correlation between the two. You can see that the top ones are dominated by China-based funds, Hang Seng-based funds. You can see in the weekly top 50, the top fund, Murray Asset Hang Seng Tech ETF FOF, gained 28.48 for the week. That is the kind of domination. So you can imagine the impact on the Indian equity-based funds. And that resulted in a 1 month gain of 62.93%. So the same fund is there on the monthly top 50 in the right. So there are many other Hang Seng based ETFs. Let us look at India based funds on the weekly top 50. The India based fund, the first one you will hit is ICICI Prudential Nifty Metal ETF, which is 0.48% for the week and 10.13% for the month. I would say relatively very impressive. DSP Healthcare Fund also is positive for the week, 0.13, but 2.91% for the month. So, which is not impressive. Coming to the monthly top 50, I am focusing only on the India-based funds. Motilal Oswal Multi-Cap Fund, 3.33 for the month, but minus 2.04 for the week. So it is quite depressing when you look at the monthly top 50. There is no promise. So I did not invest in any fund because I was busy last week, and maybe it may make sense to put some money in China-based fund, but they may be already on the top, so one has to watch it out. There is nothing coming out on the monthly based fund. So if the correction continues this week, we are better off waiting for 1 more week, because it is always good to invest at the end of correction rather than during the correction. So I would rather wait for a week and again continue with no more new investment. And I hope that correction should end by end of next week, at least for the short term. Looking at the annual top 50, which stands on its own, CPSE ETF with 89.19%, HDFC Defense Fund 79.32%. Okay, because it corrected further, it is minus 6.49% for the month and minus 3.54. So all the top three funds are correcting both on a weekly basis and a monthly basis. So the first fund that did not correct for the week, if I have to look at it, almost it is not existent in the annual top 50. Got it, no? So if I have to look at the positive one on a monthly basis, it is Invesco India Focused Fund, 0.95%. Motilal Oswal ELSS Tax Saver Fund, 1.44% for the month. So everything got pretty much wiped out here. Now, there are two in the green, Bandhan Small Cap Fund and Nippon India Nifty Next 50 Junior B's FIF. Both have negative returns for the week and the month. So how did they become green then? The concept for green is to have above average return for all the timelines from 1 week to 1 month. And they make it in spite of negative gain because the entire list is having negative gains, more or less. So they are better within the worst, you could say. Okay. Otherwise, it is correcting. So now Bandhan Small Cap Fund is at 71.54 annual return. Nippon India Nifty Next 50 Junior B's FOF is at 69.58%. So there is no promise here too. So let us look at the bottom 50. I have done bottom 50 for the weekly at the left and the monthly at the right. Some similarities and some divergence. So basically looking at the weekly bottom 50, you could see that there is a significant weekly correction. Highest one is minus 8.08. I mean the worst one. Okay. And Tata Nifty Realty Index Fund, got wiped out almost. It's a negative for the entire existence now. Motilal Oswal, Nifty, Realty ETF, HDFC Nifty. So Realty ETFs, auto ETFs, infrastructure ETFs, transportation logistics, automotive opportunities, then oil and gas ETF, Nifty 200 Alpha 30 ETF, Quantamental Fund, Tata Nifty Multicap Infrastructure 50-30-20 Index Fund, Quant Focused Fund. All these are showing bearish reversal. So watch out. Coming to the monthly top 50, which is somewhat similar, but the top one, which is the worst one, Motilal Oswal Nifty India Defense Index Fund minus 9.36. So there was some pick up on the defense funds last week, but on a monthly basis, they are still looking bad. Okay. So looking at the monthly list, the bearish ones are defense funds, oil and gas, then Flexi Cap, Alpha, Nifty 200 Alpha 30, then ESG Equity Fund, PSU Fund, Quant Fund, Value Fund, Momentum Fund, Quantamental Fund, Tourism Index Fund, Business Cycle Fund, Multicap Infrastructure 50-30-20. So there is warning signs here. Now, so again, another reason I'm skipping the investments this week. Let us look at this is actually equity bottom 50. The heading is wrong. You can see equity bottom 50 starts at a return of 3.11% for the year and goes up to 25.90. So bottom 50 is improving because all those foreign funds, emerging market based funds are all doing well. So they used to have negative returns. So here we try bullish reversal for having above average weekly return or a monthly return. And the ones are Electronic and Autonomous Vehicle ETF, Brazil Fund, World Agriculture Fund, Magnum Global Fund, Flexi Cap Fund, World Mining Fund, Metal Related, Global Brand Fund. So nothing much about India here. It's all, outside India. So again, not a good news. And a bunch of bank ETFs, Nifty bank ETFs are eternally stuck here because they corrected significantly this week. So they don't even get a bullish reversal status, and they're always stuck here in the bottom 50 annually. So their average annual return is around 17%. There is no hope on these Nifty bank ETFs here. Okay, let us move on to hybrid fund. Again, if the equity corrects, hybrid funds also correct, because what I noticed that aggressive hybrid funds in India are, not able to address the short-term equity correction through their smaller portion of debt. So the message here, let's see, looking at the bottom line, 217 hybrid funds, weekly return was last week 0.54. This week it is minus 1.45, significant correction. Monthly gain reduced from 2.1 to 0.25. 3 months gain reduced from 5.47 to 2.99. 6 months gain reduced from 12.89 to 9.67. And annual gain reduced from 23.98 to 22.75. Looking at the weekly top 50, the weekly gain 1.19 became minus 0.04. Looking at the monthly top 50, monthly gain of 3.60 became 1.15, and annual gain of annual top 50 reduced from 37.81 to 35.49. Now, let us compare the weekly top 50 with the monthly top 50 of hybrid funds. Usually you'll see aggressive hybrid funds in this list, but this time the bad news is that monthly top 50 is filled with conservative funds. See, that is a clear sign of correction and bearish times. So we have arbitrage funds, mostly arbitrage funds in the top, and so which have a smaller return numbers. So it is very depressing looking at the weekly, but monthly still filled with aggressive funds, but they are all showing weekly negative returns almost. So nothing much to talk about. The hybrid annual top 50 looks similar, but again with negative weekly returns. So caution ahead. So now we are moving to the debt funds. Debt fund summary. So for some reason, the debt funds also saw some kind of correction. I will read out. 489 debt funds, weekly return 0.9 became 0.19 became 0.02, monthly return 0.87 become 0.73, 2.466, which is 3 months return become 2.33, and 6 months return from 4.48 became 4.29, and only the annual return 8.47 become 8.53. So we have improvement in the annual return, but all other timelines return shrunk. I really don't know. I don't want to speculate why such a divergence is there. And so debt funds again overall showed lesser return. The best guess I can maybe get is maybe short-term funds were maybe removed, or I mean exited, and there were some impact because of early withdrawal, maybe, is my best guess, but it's only a guess. So looking at debt monthly top 50, we do have all positive numbers on the monthly numbers, but some negative numbers on the weekly basis. And the best debt return in this list annually came from from HDFC long duration debt fund giving 13.23. Then one more I can mention, which corrected recently, SBI long duration fund 13.14. Okay, so debt funds did not become attractive through this week. Now finally we are talking about commodity funds. Commodity funds, let's compare the numbers. Only 53 funds are there, which is primarily gold or silver funds. Last week weekly gain was 2.22, became 0.77. So there is a slowdown in the bullishness. However, the monthly gain of 5.41 become 9.11, and 3 months gain 5.06 become 3.49, and 6 months gain 16.42 became 10.97, and annual gain became from 27.47 become 33.26. Okay, one more reason why these numbers become divergent is because as we move 1 week, these numbers are not just impacted by the last 1 week's number, but also impacted by the rolling return, meaning the 53rd week, which was accounted here, is lost out here. So if that 53rd week, had a negative return for some of these timelines, so then these numbers can improve. That is what has happened. So similar impact would have been there in the debt funds also. So what is really a highlight here is now the commodity funds are giving above 30% annual return. That is amazing. It's almost a hybrid fund kind of return, and very soon it can become equity fund kind of annual return. So no green on the commodity funds. The top one is 13.23 for the month. So very impressive. And 36.87 is the return, annual return by UTH Silver ETF. Now, the top ones are all silver ETFs. That means silver ETFs have done better than gold ETFs, is the message here. Now, it may be reasonably worth it to invest in gold funds, especially if you are sitting on a cash and wondering what to do. Short term, it may be worthwhile. So, because though there will be significant volatility in these funds' performance, let us look at the overall market situation. China stimulus, so they may buy more gold and silver. Second, the Israel war can escalate. That will increase the prices of these precious metals. Third, the US election is approaching. That means there will be kind of a negative sentiment on the equity market in terms of uncertainties. So these three together can weigh better on gold and silver, though these prices will be very volatile. So one needs to have the ability to hold on for at least for a month ahead. Maybe it is worth investing on gold or silver, and silver seems to be ahead of gold here in terms of returns. So that brings to the discussion. Usual disclaimers apply. This is just an insight based on quantitative analysis of value research data downloaded. This is not a recommendation nor a solicitation for mutual funds investment. One needs to do their own due diligence by reading the prospectus of each fund and need to be responsible for their own decision. You can track me on various platforms here. The blog comes first before this kind of a video on napspancorner.blogspot.com. And I'm also a trader and investor in the stock market. So the peer group is in this WhatsApp. So that's all I would like to share. So see you next week. And hopefully the next week numbers will be better. So have a good one. Thank you.